All right, you're very generous. So let's go now and let's start doing this for the. Thank you for your generosity. It's very humble. Okay, let's. Okay, yeah, we'll see. I don't know. It's always questionable, but let's leave it there. Let's not speak for them. They have to decide what they want to do. So let's go with our question here. This is question for high and low methods. Again, this one is the cost of good manufacture. So if you want to have this on the recording, once you see the cost of good manufacturing question, what you have to do is observe the information, remind yourself what you have to do. Basically, you're looking the number which is going out from the credit side on the work in process account, which is present the cost of good manufactured. So you have to ask yourself from where that numbers come from, and that numbers come from the direct material that you use, direct labor that you use, manufacturing overhead that you use. Plus, you're gonna add the beginning balance and you're gonna deduct the ending balance, and you're gonna get that number. Basically, you're gonna follow the formula which is below the work in process account. But then that creates the problem because you don't know how much material you used. So that means you have to go to the raw material account and applying the same thing, beginning balance plus the purchase of the raw materials minus the ending balance. And that's going to give you the direct material that you use. So basically, the whole cost schedule for the cost of goods manufactured is calculation of the formula for the balance sheet account that has a normal balance debit 2 times. Once you do this, you're going to get the cost of good manufacture. If you want to go for the cost of goods sold, you have to do the same calculation 3rd time. Again, what you're chasing is the credit on the what's the credits on the credit side on the balance sheet account that has normal balance debit. Why is that? Because in the manufacturing company we have 3 inventory accounts always: raw material, work in process, finished goods. Cost of goods sold comes from the work in process. Now let's move now to the high-low method. On the high-low method, obviously we're going to have information related to some data. Units obviously will be now usage. Let's go with usage. Now, what will be shipped? Or is it going to be machine hours? Is it going to be labor hours? Is it going to be number of shoes produced? It doesn't matter. It's going to be usage. One will be the usage, the other one will be cost. Those are the 2 information that you're looking for: usage and the number of units, and cost and the dollar amount. Once you have those 2, sky's the limit. What you have to do now? You have to identify on the usage side where is which period you have the highest possible usage and which is the period that you have the lowest usage. And as we can see, now there are 2 ways to do this question. Now, if you do it again, you're going to do it on the lock screen, obviously. So in order you to use the Excel spreadsheet, you have to have a second device. Otherwise, you have to get a sheet with some pages and start working on manual on the paper. Unfortunately, I cannot show you it on the paper because I don't have a way to share my table that I'm sitting right now, but I can show you my screen with the Excel spreadsheet. So on the Excel spreadsheet, what you have to do, you have to identify the 2 levels. One is high, the other one is low. Always start with the high because the high is going to be bigger number than the lowest. And since we're looking at differences, we have to, that will be easy for us to make that calculation. So let's start first, high. On the high level, on the Excel, if you have the data, you can easily go and find out which one is the maximum amount out of all those, and you're going to say the maximum is 8. So on the month that they have 8 usages, that's my higher point. And I'm double checking to see is there anything higher than 8. There's nothing. So luckily the Excel spreadsheet is correct. It's very low chances the Excel spreadsheet not to be correct, but double check yourself. On the low level, what we're gonna see, same thing, but now I'm gonna say check for the what is the minimum value of all those amounts. And as you can see, the minimum amount is 2. So I'm going to double check and see if the 2 actually is the lower. Yeah, the 2 is the lowest. Once I have the high and low in the usage, I'm going to chase the cost at the highest level and the cost at the lowest level, not the highest cost and the lowest cost. Because here, let's say, let's pretend for some reason, here I have my cost here is, let's say, $3,700. If that happened, and if you see that, then that's why usually the students get confused. And that's why I'm tricking the students. When I give them the high cost on the level which is not related to the high level. And then they start asking, I'm sorry, this question is wrong. No, the question is not wrong. Everything is okay with the question. The question tests you, do you pay attention what you have to do and what you don't have to do? And if this on the high level of usage, apply the cost. On the low level of usage, apply the cost. So even if here the cost is $1,100, I'm still going to use the cost which is at the lowest level, which is 2, not 3. The lowest cost is irrelevant because lowest cost comes with the month when I have 3 shipment, but the 3 shipment is not my lowest point in the usage. So that cost here is irrelevant. So how we can do this, how to make the Excel work, we simply gonna use the formula. I'm gonna use the formula, and I'm gonna use vertical lookup, and I'm gonna look for the value of 8 on this tray, and I'm gonna use, sorry, that's will be the first. We're gonna look for value of 8. The tray is all those columns, and I'm gonna get the value of column 3. And if it's wrong, I'm gonna say false. And I'm getting $3,600. Well, just like magic. Now I'm checking, is that actually the correct information? That's totally correct information. That's my highest. Next thing that I'm going to do, I'm going to apply the same formula here with the vertical lookup. And that vertical lookup should identify looking for value 2, where the usage is 2 on this tray. And I'm going to track once I find it number 2, I want to extract the information from the third column because columns are 1, 2, 3. The third column otherwise will be false. And I'm getting the 1,500. Now I can check is the 1,500 my the cost of the lowest level. Yes, it is. So I can highlight that one in green, and this one will be in this color. So I have my highest and lowest. I already have a person who identify all the costs. So what I'm going to look is the difference. Once I find the difference, so this one here. Once I find the difference, I can start using the calculation. Let's go here. And the difference between one and the other is here I'm going to have 8 minus 4. That's going to give me 6. You have here 20. Let's move this one to 20 so we will be consistent. And put this one in the middle. And here I'm going to have the same calculation. My value here, 2,100 is the difference. So once I have the difference, I can easily calculate the variable cost. Variable cost for the single shipment, if I have the cost of 2,100, will be the 2,100 divided by 6. So the variable cost for every shipment is going to be equal. Sorry, not here. Wrong. And here I'm going to have calculation between this number as a numerator and this one number as a denominator. And that's going to give me the cost per shipment. So every time when I have a single shipment, that's going to cost me $350. That's great. But now I have to find out what's the fixed cost. For the fixed cost, we can use either higher point, either lower point. Let me know which point you want me to use, higher points or lower point. Literally is irrelevant for me. Low point. Okay, let's go with the low point. At the low point, what do I know? At the low point, I know the following. My usage. Sorry, I better paste it as numbers like this. I know at the lowest point, my usage is 2, and my cost, that will be my total cost. If we modify this, that will be total. Total cost is 1,500. What do we know about the total cost? We already know that the total cost for anything is combination of all the costs. What are the costs that we're using here? We have a variable cost and we have the fixed cost. So the total cost will be, once I get the total variable cost, once I get the total fixed cost, I get the total cost. What else I know? I know that the fixed cost in total stays the same. Variable cost in total changes. What drives then the variable cost? Variable cost is driven only and only by the usage. So more I'm using, more I have to pay. Less I'm using, less I have to pay. So in that case, the variable cost, it will be equal to the number of units time cost per unit. Well, variable cost per unit, the newest Excel, it's acting very well. Always try to correct me. That wasn't the problem with the oldest version of the Excel, because the older version of the Excel did give you some still give you some level of control, while the new version always want to take over and tell you different things. But anyway, let's leave it the way it is. So what they know now, that the total cost is equal to the number of units time the variable cost per unit. That will be in brackets plus the fixed cost. I'm going to make it bigger so you can see it in a second. Finish this formula first. So that's what I know. So from this point where I am, how many things from this formula I already know? Well, I obviously know my total cost. My total cost is $1,500. No questions about it. What else I know? Magically, I know that my variable cost per unit. Why? Because we just calculated, and that's $350. What else I know? I know the number of the shipments that they have. And those shipments are only 2. So if I substitute in this formula, can I find the fixed cost? The question is, who's going to stop me? So what are we going to have? We're going to have 1,500, which is equal to bracket 2 times dollar amount of 350, close the bracket, plus fixed cost. And once we solve it, we're going to have 1,500 to be equal to 700, the way I see it, 700 plus the fixed cost. And the fixed cost will be equal to, somebody already posted, $800. And that person is absolutely totally correct. So if you want to use the high point, go with the high point, but trust me, you're going to get the same result. So the fixed cost here is equal to $800. So now my fixed cost, I already know my fixed cost. Great. What can I do from now? I can substitute in this formula, and now I can have my formula. My total cost based on the high-low point, and when I'm using the high-low point, always and always will be equal to number of units, number of shipments in this case, that I'm going to make, time $350 per shipment, plus the fixed cost, which is $800. So what do I need to calculate the total cost? Number of shipments. So if I have 7 shipments, how much will be the total cost? You can easily calculate. How about 10 shipments? Well, that's going to be the cost. How about 22 shipments? Well, that's going to be the cost. And you start applying the formula. Make sense? That's your high-low method. High-low method. Questions with this high-low method? Do you see anything scary here other than me? You have to say something, otherwise I'm going to stay and wait for you to say something. Nothing, right? I'm the only scariest person here. Okay, great. Now, another thing that you have to do, that you will have to do on the exam. What do you remember about, do you remember anything about traditional income statement and contribution format income statement? I believe on chapter 4 we talk about it, and I believe in chapter, I can't remember, chapter 5, no, but chapter 4, I believe we talk about this one. And end of the chapter 3, there was something about the contribution format. That's okay, Kayana. That's why I'm here to remind you. It's nothing scary. It's just another calculation of all the information which is given. So let's pretend that we have a question which give you traditional income statement. So once you see the traditional income statement is going to look something like this. You're going to have obviously sales. All the statements start with sales. Then you're going to have cost of goods sold. Then you're going to have gross margin. Then you're going to have operating expenses, which operating expenses now can include different categories. On the operating expenses, you may see something like, thinking of something, what you may see, may see utilities expenses. You may see some sales and administrative expenses. And you may see something like, what else? Salary expenses. Okay, great. And then you're going to have, after that, you're going to have operating income. Let's collection income, operating income. That's it, and that's our income statement. Now, what we have to do is just put the some numbers here and make it look like an income statement with the job is done. Now, what you're gonna see here is a different presentation of the information. Let's put some numbers. Let's say sales are 500,000. Random numbers, nothing related to. There's no. I'm just picturing the numbers right now. Cost of goods sold, let's say 200,000. And then you're going to have our gross margin, which is calculation between this one minus that one. Okay, 300, then you have utilities. On utilities, let's say 50,000. Then we have sales administrative 120,000. I have to make sure that I not exceed 300,000. Salary expenses, let's say another 70,000, 190, 240, that should be okay. And then operating income is going to be equal to 300,000 minus 50 minus 120 minus this. No, actually, it's not going to be like that. So sorry. I'm going to step back for a little. Just a second. Just give me a second. Let's make it proper way. This is going to move right here. We're going to delete all this. This will be our calculation of all these numbers here. And now it's easy. I'm going to just get this one minus that one, and we're getting the final number, which is 60,000. 60,000 my operating income. Now the question is going to ask you, this is your traditional income statement. Please prepare contribution format income statement, knowing that in utilities, you have a fixed cost and you have a variable cost. So 20% of the utilities are fixed. And the rest is variable on the utilities. On the cost of goods sold, you already know everything is variable cost. That will be 20% is the fixed cost. On the sales administrative expenses, 75,000 are fixed cost. And on the salary expenses, 2/3 are fixed cost. Right? So I'll put a different how can I say, different type of information so you can get here comfortable with this. So what we have to do, we have to prepare the contribution format income statement, which contribution format income statement, what you have to remember is it's going to start with sales. There's no other options. It's going to start with sales. Then it's going to finish with operating income, which operating income is going to be exactly the same. Unfortunately, I cannot change the income. Why? Because the period already passed. Whatever happened in this company, it already happened. So I cannot change the sales. I cannot change the operating income. What I can do is to group those costs in different way, present in different way. What will be the different way? I'm going to present as a variable cost, and then I'm going to get contribution margin, and then I'm going to prepare the fixed cost. I'm going to get operating income. Now, to make it a little bit more challenging, let's insert that will be variable cost, that will be cost of goods sold. Since I know that my total cost of goods sold are variable costs, I'm just going to plug them here. 20%, 200,000 of variable cost. Then I'm going to have the variable cost of utilities, which will be only 20% of this amount. Actually, the opposite is 80% of this amount is going to be time 1 minus 20%. Then I'm going to have variable cost of the sales and administrative expenses, which will be this amount minus the fixed cost. And then I'm going to have the variable cost of the salary expenses, which is 2/3 of the fixed cost. That's going to be equal to 2/3 of fixed cost, so 1/3 is salary expenses are variable cost. I'm going to change this number. Sorry, I'm going to change this number. I didn't think about it. So let's change this one to 60. So my operating income is going to be 70,000. Why 60? Because it's now can be divided by 3. That's the whole idea here. So that's going to be equal to 60,000 times in bracket 1 divided by 3. Only 1/3 is variable cost. So I have my variable cost, the total variable cost in this case, I can easily calculate. It's going to be here equal to sum of all those amounts. That's my variable cost. My contribution margin in this case will be my sales minus the variable cost going to give me the contribution margin. After that, I have to express the fixed cost, which fixed cost related only to those 3 items, which I can easily move here. And I will move them here by putting this. And what I'm going to do, I'm just going to change the first letter here instead of variable to be fixed. And one more time, and I'm done with this. I have the fixed cost. So one more option is to just to find the differences between what you have minus what you already deducted as a variable cost, or to apply the rest of the percentages. I'm gonna just go with the differences. So original minus the 40,000 is gonna give me the fixed cost for the utility expenses. The next one is gonna be 75,000 less, and the salary expenses for this. So my total fixed cost here will be sum of all those numbers. So that's my fixed cost, 125. So 195 minus 25 does give me 70. That will be the question here. Obviously, it does. And that's how you're converting the traditional income formats income statement into contribution income statement. I don't think there's any challenge in this mostly, but in applying the percentages. You correct me if I'm wrong. That's not something that is going to give you a challenge or is going to give you some trouble. So let's keep going with this. Break even. On the break-even point. Now, you have to know how to calculate the break-even. Now, on the break-even, there's a lot of, what can I say? Questions, no. Yes, there's a lot of questions posted already. The exam, the material for the exam that you have posted on Blackboard, there's a lot of options there too. Which question you can look and assess. Any questions will be applicable here for this for the cost volume profit analysis. Now let me see what kind of questions I can grab from the set of questions that you have available. You're going to have question for there's a one ginormous question, question number 4. If you go to the question number 4, you're gonna catch all the twists on the cost volume profit analysis question. So I'm going to transpose that information from question number 4 on the Excel spreadsheet, and we can quickly go over a few questions so you can see the application for that particular set of questions. So we have when the production is 1,000 units, there's some information available for us. And the information is that our sales are 20,000. Our variable expenses, variable cost is 12,000. Then contribution margin obviously will be 8,000. That will be pretty much impossible to calculate, but if you have a calculator in your hands, that should be straightforward. 20 minus 12 should gonna give you always 8. And then you're gonna have the fixed cost, which fixed cost is 6,000. And at this point, the company is going to generate operating income of 2,000, which is 8 minus 6. Again, that will be hard to calculate, but if you use the fingers on both hands, you don't even need to calculate in this case. So you have so many options here. You can use the calculator, you cannot use calculator, you can use Excel spreadsheet the way I'm using it, or you can use your hands, or you can use ChatGPT. But again, trust me, 8 minus 6, you won't be able to change it. It's always going to be 2. So now, once we have this information, what we can do? First, we can assess the information and think about it. Is this company above the break-even? Definitely, the company is above break-even. What that means? The company generates enough contribution margin to cover the fixed cost. And they generate operating income. As long as they generate operating income, they're above break-even. No questions about it. If they will be on break-even, the operating income will be 0. Okay, great. What else? Fixed costs are fixed costs. How the fee is going to change? If you change the level of activity. The level of activity in the question is between 500. These costs are applicable between the level of 500 to 1,500 units. That's our relevant range. So if I change the production to 1,500, how much will my fixed cost? Will be exactly the same. That's the beauty of the fixed cost. They stay the same. Now, sales and variable costs, they're driven by the production. more I'm producing, more variable cost. And the sales, since I'm selling what I produce, the production is sales driving the sales and the variable cost. So knowing that, what else I can calculate? I can calculate the percentage. Sales divided by sales is always 1. So that means sales are always 100%. Yes, I don't like to be 100%, but they're always 100%. Now, what's the variable cost as a percentage of sales? And then we start expressing divided by 20,000, and we're going to see that the variable cost is 60% of sales. Then, is there any other option for the contribution margin other to be 40%? Pretty much no. How are you going to get it? It doesn't matter. You can simply get the sales minus the percentage minus the variable cost percentage. That would be one way. Or you can get the contribution margin divided by sales. Still going to give you 40%. Great. That's excellent. But I want stable. I want something solid. I want something that doesn't change. I already know the fixed cost is stable. Means it doesn't change within this relevant range. The other question that you should ask yourself, what else doesn't change within the relevant range? Variable cost and the sales price. So what do I need? I need sales per unit and variable cost per unit. Once I have this, I have everything per unit. And per unit, I'm going to calculate now the sales variable cost contribution margin. Fixed cost, I know fixed cost is going to stay the same. So per 1 unit, if I'm selling and producing only 1 unit, what's going to happen? My sales price will be divided by 1,000, and that's going to be $20. Variable cost is going to be 12 divided by 1,000, that's going to be $12. And my contribution margin, the only option that has is to be sales minus the variable cost, which is going to give me $8 or simply $8. Okay, great. I have everything that I need. From now on, nobody can stop me. If you want, what we can do here now is we can calculate another percentage. See how much is the sales price divided by sales price per unit. That will be 100%. Again, sales divided by sales is 1 or 100%. How much is now the variable cost as a percentage of sales? Magically, we're going to get the same result that we get on the first place when we're selling 1,000 units. Why? Because we're not changing the sales price and we're not changing the variable cost. We're just changing the number of units, which are exactly the same. Once we know that, everything is easy. Then contribution margin is going to be sales minus the variable cost margin, or simply 40%. Done. Now, the break-even. What is the level at which going to bring me break-even? Well, let's say, now let's go with the question. What's the contribution margin per unit? Well, we can calculate the contribution margin per unit is $8. What's the contribution margin ratio? 40%. What's the variable expense ratio? 60%. If the sales increase to 1,001 units, what will be the increase in operating income? Obviously, this door is going to plug here. So our operating income is going to increase to exactly $8, which is the contribution margin for that additional unit that we're going to sell. If the sales decline to 900 units, what will be the net operating income? So if we're selling 900 instead of 1,000, what's going to happen? We're going to lose the contribution margin of those 100 units. So if at this point we're selling 1 unit, we're getting contribution margin of $8. If I sell now, let's calculate this and put it here. If right now I'm selling 900 units, let me move those ones as numbers. I don't want those ones to change because they're not going to change regardless. If I know that I'm generating $8 contribution margin per unit. I know that my fixed costs are always and always $6,000, which doesn't change. And I know that my operating income is simply calculation between the contribution margin, not that one, that will be operating income. Here it's going to be simple calculation between the contribution margin minus the fixed cost. How much is my contribution margin if I sell 900 units? Well, 9 times 8 is 72. And when I add two zeros, we're going to be 7,200. So my operating income simply is going to be 1,200. Do you have to calculate the sales and then deducting the variable cost? Well, if you want, you can. But again, since we're not changing the cost, sales price per unit and variable cost per unit, contribution margin is going to stay $8 per unit. Times 900, it's going to be, that's the shortest cut. Get the 7,200, deduct the fixed cost, see what's going on. Okay, the next question is going to ask you for this set of questions. It's going to ask you, let me see what's asking the next question. I have to find a set of the questions because I believe I close it. Yes. So the next question is going to ask you, if the selling price increased with $2 per unit and the sales volume decreased with 100 units, what will be the net operating income? Now we start playing with the numbers. That will be simple calculation. Now, once you have it on the Excel spreadsheet, you can easily play with the numbers. Increase the sales price by $2, see what's going to happen. If you want, what we can do is I can flip it here, and that will be as numbers. Then I need this one to be calculation. And I need those one to be some form of calculations, which coming from those numbers. And now will be easy. Sales price gonna go with 2. That will be 22. My contribution margin variable cost gonna stay the same. And the volume, instead of 1,000 drop to 900, since my fixed cost gonna stay the same, right? With no changing the fixed cost gonna stay $6,000. And now contribution margin is gonna stay, I'm gonna move to 9,000 or $10 times 900 units that I'm selling, 9,000. So my operating income is gonna jump to 3,000. So which one is better for me, to sell 900 units or to sell 1,000 units? Obviously, 900 units and to push the sales price with $2. That's what TransLink gonna do on July 1st. They're gonna increase the operating income by simply increasing the fair price with certain amount of cents. How much will be that increase the operating income? They're gonna say, no, there's no increase of the operating income because the cost going up. Sure, there is. And we're gonna pretend that we believe them, right? So now the next question 8 will be what the break-even point in per units of sales is, and what's the break-even point in dollar sales. So the break-even can be expressed of the number of units, and the break-even can be expressed as a dollar of sales. Right? Number of units is very simple. You get the fixed cost. Always play with the fixed cost divided by contribution margin per unit. And you're going to get number of units. For the sales, get the fixed cost again, divided by the contribution margin ratio, and you're going to get it. So what you have to do here, get the fixed cost divided by the contribution margin per unit, 750 units, break even. Total sales going to be fixed cost divided by contribution margin ratio. That's going to give you the number which is equal to 15,000. Why? Because the $15,000, 40% of the $15,000 is going to give you exactly $6,000, which cover your fixed cost and your break even. And then you're going to play with how many units we need to sell to achieve the target profit of $5,000. If you have the target profit, what you have to do is still using those formulas for the break even, but add. Let's go with the targets now. If I need, what is this here? How many units we need to be sold to achieve the target profit of $5,000? Target number of units, where the fixed cost is, just add the profit that you want. And these guys, they want $5,000. Well, give it to them. Add it to the fixed cost. Once you add it to the fixed cost, run the calculation again, and you're going to see how much they have to do. So the $6,000 is my fixed cost plus the $5,000 that they want. That divided by the contribution margin per unit is going to give me the target. How many units I need to sell? I need to sell 1,375. If I have the targets, probably the next one is going to be what will be the margin of safety. Margin of safety, if I'm currently at $2,000, let me get this calculation here and move it right here. So that will be equal to, we said 20, and that's 12, and boom, we have our percentage. So what we said is the break-even point. I need the break-even point in units. If my break, I already know my break-even point is 750. Where is my, and in this case, I'm selling 1,000 units. What's my margin of safety? Margin of safety. In this case, as a number of units, it's 250. Why? Because currently I'm selling 100. As a percentage will be, where am I currently, how much is the margin of safety divided by where am I? And that's going to give me, I'm at 25% above my break-even point. That's one way to get it. The other one is a dollar of sales, which is exactly the same. Degree of operating leverage will be simply how many times the contribution margin transfer to operating income. So your operating leverage, oh no, not wrong cell, sorry. Have to be here. Operating leverage is simply, it's going to be equal to the contribution margin divided by operating income, or in other words, how many times the contribution margin flows into operating income. And in this case will be 8,000 divided by 2, which is 4. And then what's going to happen if I increase my sales with 10%, how much will be increasing my operating income? 40%. That's the usage of the operating leverage. That's break even here. I think that's more than enough on the break even. I don't think you need anything else. If you do the question 4 from the set of questions, you're going to have more and more than enough. How can I say? That would be more than enough comfort you to do the break even. After that, you even have a question that gives you the compute company margin of safety, question 5, and compute the margin of safety of the percentage of sales. We can do that as well. That's straightforward. Next thing. And there's one more question. Weighted average contribution margin per unit, operating income. What this question is, there's a question 6 that give you another target sales of this company. So let's go with another question. Let's move to chapter 5. On chapter 5, what you're gonna see? On chapter 5, I want you to calculate me the predetermined overhead rate. How much is the predetermined overhead rate? Which will be simply total cost, estimated cost divided by total estimated usage. So what you have to do is to find out is how much is the manufacturing overhead cost total, how much is the total usage, and come up with the percentage or number, whatever it is. Once you do that, then you have to calculate was the overhead over applied or under applied. So what you have to compare the actual cost versus estimated cost. Oh, sorry, applied cost. Actual cost versus the applied cost. Actual cost you're going to get from the different manufacturing overhead cost that's coming for the period, and the apply is the one that you're applying to the job based on the usage. Once you calculate this, you can easily say it was it over applied or under applied. Once you calculate that one, I'll ask you to do the schedule for the cost of goods manufactured one more time. So again, start with the beginning working process, apply the raw material, beginning raw material, purchase raw material available, less the ending balance, how much was used, add the direct labor, add the manufacturing overhead, come up with the manufacturing overhead cost, apply, deduct the ending balance, come up with the cost of goods manufactured. Then you're going to see how much is the cost of goods sold, and then you have to make adjustment for the cost of goods sold and how to uh, balance the manufacturing overhead account to bring it down to zero for the over apply or under apply manufacturing overhead that you may have. That's again is very straightforward questions. I don't see you to have any problems because what you have to do is under apply, over apply, you have to apply directly to the cost of goods sold. No, you don't have to go with the allocation for chasing what's the balance in the working process or balance in the finished goods and balance in the cost of goods sold. Directly you're applying to the cost of goods sold. Another question that you might see is you might see different accounts which are related to the job costing. Let me find something here on the job costing and I'll show you what it's gonna be look like. Try to find something which doesn't have a data here. It doesn't have data, but I can easily use this. Probably from chapter 5, you still remember this crazy, crazy, crazy chart, which the purpose of this chart is only one, to calculate cost of goods sold. And for that reason, what we're going to do, we're going to start again with the raw material, working process, finished goods. So be prepared for question which is going to give you information about raw material. Let's say 50 is the beginning balance, the purchase is 500 or 5,000, ending balance is let's say 70, and then you're going to have a different things. Now, some of the information will be missed. For example, you may have indirect material is, let's say, so that will be direct material use will gonna be 50 plus 5,000 minus 70. It's gonna be a number. Let's put this number. And direct material is 4,000, let's say, and the indirect material is 908. For example, payroll, total payroll is 5,000, which 5,000, 4,000 are direct labor, and 1,000 is indirect labor, something like that. I'm just playing with the numbers right now, nothing specific at this point. Then manufacturing overhead is going to be, let's say, other cost, let's say 5,000. Here, 5,000, and that will be 5,000. Now you're going to have here beginning balance, let's say 60, 100, 600, and then we're going to have the ending balance of, let's say 1,000. How much is the cost of goods manufactured? That will be beginning balance plus direct material plus manufacturing plus manufacturing overhead minus the ending balance. We're going to get that number. That's going to flow to the next account, which is finished goods, which starting with the balance of 80,000 or 8,000. We're going to transfer 12,600. Ending balance will be 3,000. And question is how much we sold. Obviously, that will be 8,000 plus this one minus this one's going to give us the number. Okay, so you're going to have information about those accounts. Some of the information is going to be missing. For example, let's say that you don't know how much direct material was used, right? You don't know that. This number is hidden. And what else is going to be hidden? Let's say this number is going to be hidden for you. And the question is going to ask you, okay, how much is the direct material which was used during the period? And you're going to say, oh my God, I cannot calculate it. What I'm going to do now? And well, there's a lot you can do. First, get the material, total material used, deduct the indirect material, and get the direct material. That will be one thing to do. The next one to do will be, for example, it might be direct labor or indirect labor is hidden for you. Indirect labor is hidden for you, and direct labor is given. So, and you see how much getting out from the payroll. And the question is, how much the indirect labor use for the in the manufacturing overhead account? And you're going to say, oh no, how can I do this? Well, very simple. Get the payroll for the period, deduct the direct labor, the rest is indirect labor. Boom, done. And something like that. There will be missing information on this, which can be easily calculated. The question is, can you calculate it? Obviously, what I want you to do, and the simple thing that I will strongly suggest you is, if it's too much for you, if you don't understand what to do, extract the information from the question, put it on the T accounts, put it on the T accounts, get them all the information that you need, balance all the accounts, because remember, those are balance sheet accounts, which normal balance debit, that means debit plus the beginning balance plus the debit always equal to credit plus the ending balance. Knowing that in mind, fill all the information that you need to fill, and then start asking the questions. And then you're going to know exactly how much is direct labor, how much is the indirect labor, how much is the direct material, how much is the indirect material, how much is the beginning balance, how much is the ending balance, how much is the cost of good manufacturing, how much is the cost of goods sold, how much is the ending balance of the finished goods, how much is the beginning, everything will be right there in front of you. Make sense? So you have no reason to complain about this. That will be job costing. That will be the question for you. With the T accounts, you to come up with the information for the cost which is used by the job costing process. And the last chapter that left to cover is the chapter number 7. Which chapter number 7, if you remember, that was the activity-based costing. Do you remember the calculation for the electricity? Do you remember how we come up with the activity for the electricity and we come up with the cost? Are you guys there? So do you remember how we did this? I'm trying to find the PowerPoints for chapter 7. I found the PowerPoint chapter 7. So technically what I want you to do is, one of the questions will be very simple. It's going to ask you to do you're going to have the cost. Let me copy this one from slides and I'm going to flip it to the Excel spreadsheet. That you're still seeing the Excel spreadsheet, correct? Activity-based costing. So you're going to have this kind of information, not that kind of information, this kind of information. Oops, doesn't show. You know, it's very annoying when the certain software decide to not cooperate by thinking that we cannot overcome the problems. But unfortunately for the software, we have a magic software which is called snipping tool. And that snipping tool is going to help me to copy and paste everything. You know, since I discovered snipping tool, my life become way easier, especially when I'm teaching lectures, believe it or not. So from the snipping tool, this is the information that I have. So as you can see, I have different type of costs. Now I can make it even smaller. The next thing that I know is from that part of the slides, the next thing that I know is this. This is probably not gonna let me to, so I'm not gonna try to do anything. I'm just gonna go back and I'm gonna do it still using the snipping tool. And we're gonna have this information here, right next to the first one. Do you remember this? So what you have to do is, I want you to come up with the total cost for the customer order, total cost for the product design, total cost for the order size, total cost for the customer relationship, total cost for the others. How? By knowing the percentage, knowing the total cost for every single of those items, apply the percentages, and come up with the cost. By knowing that once you apply all the costs here, the total of all the application that you're doing is have to be equal to $500,000. Everything that you have to do here is $300,000. Now, I'm not going to do the Excel spreadsheet for you. I'm going to leave it to you because I want you to do some heavy work, which heavy work is not going to be that heavy. It's going to be very straightforward. You have the columns. You just have to organize it, make it. Again, don't forget when you're getting this total, all this total has to be equal to the total cost. And each of those costs, when you combine it on the bottom, have to give you the same number. So you have to check yourself on the horizontal and on the vertical. Have to give you the same number. That's going to be the key here. If you get the same number, you're correct. Okay, that will be one question. And the last question that we have to do, one more question left here. Let me see what's on the last question. You have to come up with some costs which are related to the cost for the party. So there will be information given to you. So you have to come up with the cost per unit. And based on the cost per unit, you have to do the different calculation. First, you have to calculate how much is the cost per one activity based on the total cost of the activity and the total usage of activity. You have to come up with the cost for the single activity. And after that, what if this happened, what's going to happen? If this happened, what's going to happen? And applying the cost and see how much will be if you have different kind of scenarios, what's going to happen with that. Again, very straightforward. There's nothing scary with that one. Mostly application of the activity-based costing, which will be very similar to, let me find something that I can show you, which will be very similar from the slides again. I'm going to use the slides here. Let me open another spreadsheet here. And from the slides, what you have to do is come up with that will be the perfect example. Let me see if this is going to work. No, it doesn't work. Snipping tool again. Thank you, snipping tool. Very useful today. This is what you have to do. So you're going to have the cost, you're going to have the total activity, you have to come up with the cost per activity. And then the question is going to ask you, if you're having this type of usage, how much is the cost? If you have that type of usage, how much is the cost? So there, I don't expect you there to be a challenge on this cost, activity-based costing, but you can always surprise me. It has to be different, of course, activity-based costing one. And that will be your calculation. Let's label this one for the save as. Let's browse it on my computer here. I'm going to save it here as a calculation for midterm questions. Save. And now I can share my screen and I post it so you can see where exactly I'm going to post it. So you can have it available. Let me find the course and I'm going to show it to you. We are you guys are section 51, correct? I always forgetting about those sections. create a folder. Let me see if this fell in the right position, and let me do another one. Let's create this here new one, which will be document only. Calculation, calculation for midterm questions, and that will be also visible for you. So, okay, I'm done it. So let me show you where it is. Can you guys see? Can you guys see my screen?
Yes.
Yes.
You're section 51, correct?
Yes.
Okay, so some of you are not 51, but that's okay. For the section 50 also is going to be posted there. Exactly the same pattern. So under the course material, now I create a new folder here, which is midterm exam. In the midterm exam, you have the midterm practice questions and the calculation for the midterm questions, which is the calculation from today. That's for section 51. Let's do the same thing with section 50. So they're not going to feel underrated on anything like that. So let's go with the section 50 and do the same changes the way I did it with section 51. And that will be the folder which is created. Once I have the folder, then life is away, easy, boom, with the questions here. And the next thing is create document, which is gonna be like this. And file, upload from here. Let's upload this file. Open. And that will be here, save. And visible and save, and you're good to go. So both sections have it. Questions? The next thing that left to do is do the midterm.
Excuse me, Ivan. So last day for
Yes.
midterm will be June 22 or 23rd?
Let me see. You don't really think that I remember, do you? Even though I just meant. But you know what? I know where to look, which makes my life a way more easy. So I don't have to remember. As long as I know where to look, I don't have to remember. So for both sections, the exam will be available on exactly the same days, starting from June 19, which is Friday. So Friday morning and closing on Tuesday, June 23rd,
At 11:59?
11:59.
Okay,
But please don't wait to June 23rd.
No.
10 o'clock, 10 o'clock, and then start the exam. Please
Oh.
don't do that. Okay. I know some students doing that, but please don't be those students. one of those students. I know, but when you have
It's the
something
case
for the
technical
long,
difficult.
yeah, when you have something for the long period of time, you always tend to do it in the very, 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 very last moment. Don't do that, please.
So Ivan, how long do you think the exam will take us?
The way I see it, no more than 2 hours.
Okay, thank you.
But you're going to have more than that, so you can easily stretch your time. Again, I'm giving you, I'm incorporating breaks, hydration breaks, coaches breaks, anything like that. So you're going to have more than enough time. All those incorporated. I even give you a break for washroom. You have a washroom break as well. Can you take a dinner during the exam? If it's a light snack, that's gonna be okay. The break to watch a World Cup. Now you can use this. You can do it. What you can do is you can turn on the game, have it on the what will be that on the TV. Stay in front of the TV and go for it. But be careful. You still have to pay attention for the exam. What do you mean you cannot concentrate? What's the score of the game right now? Okay. Okay, there we go. You see, people can concentrate on the exam review plus the game. Can I go to the gym? Only if you're doing mental exercises, yes, you can. But don't physical exercises. Mental exercises. That means you close your eyes, practice a little bit, and then open your eyes, go for it. The other option is you have to, if you want to do it in, go to the gym, you have to bring your laptop in the gym, and then you can do the exam in the gym. Do you know, in order to practice, to make a physical exercises, we're going to the gym. But in order to do the mental exercises, we're going to college. It's the same thing. It's still, but the one is called gym. The other one is called Douglas College. Yes, Douglas College gym. I'm sorry, you won't be able to come to the Douglas College this semester, especially on this course, which is kind of sad story. But I know some of you are already there, but most of you won't be able to come to the college, or at least to see you in the classroom. Are we guys gonna see each other at least once in the during this course or not? Not at all. What do you think? No. Okay, no. Depend on you. Depend on me. Well, technically, I would at least. Yeah, if you visit me in the person in the yes, yeah, that would be probably the only option. Otherwise, we're not meeting each other, right? You don't want to see me, and let's keep it that way. I mean, you see more than me. You see me more than enough, right? And you probably, if you're watching those recordings, you're getting sick of me. Sorry. Questions? So if you see me in the corridor in Douglas College, please at least say something, because I can literally pass by you and I would never know that you actually took this course with me. Again, those will be one of those courses that I have no idea how the people look like, and but you probably you can get the idea how I look. Same thing happened when it was during the corona. You know that there's students on during the corona. You know all the students were wearing masks. Actually, you don't know because probably you were not in the college. So everybody wearing the masks, right? And suddenly, right now, there's students coming and say, "Hey, how are you?" And I'm looking and I'm like, "Okay, mm, look familiar." But now I have to picture the students with mask, right? When I picture it with mask, I kind of can I relate it to the student that I have in the classroom. But when you remove the mask, I'm totally blank. So that's another thing. Questions, guys? No, I'm not in Kukuit. I'm in the new Westminster camp. So if you come to see me, please come and see Xiaolin as well. We're both in New Westminster. Yes, I do have to. I promise that I gonna come and visit you at least once, and I will come. Don't worry, it's coming. Are you in the campus on Mondays or Tuesdays? No Mondays, Tuesdays. Tuesdays, yes. Okay, but Tuesday I have an evening lecture. My lecture is like a 6:30. You won't be there after 5. There's no reason you would be there. Tuesday, Wednesday, Friday. Okay, Monday I'm there. Monday have a lecture from 11:30 to 2:30. Usually stay until 3. Don't worry, I'm gonna catch you not next semester, but probably I'm gonna find time to catch you. Don't worry. January 2027, yes. Definitely yes. Or maybe before. Most likely before. I'm gonna try to catch you before. So you're only Tuesday, Wednesday, Friday. Okay. I'll remember. And your room is? You should be on the not on the north side. You should be on the south side, right? S2805. Okay. 2 and 810 and 515. So you either have to remember 2805, either you have to remember 15, which is 2805. Okay. Easy. Any other questions, guys? I mean, there was not much of questions, but if everything is clear and if you understand what you have to do on the midterm exam, go and do it. You have the questions, they're posted, everything is there. You have no reason not to be successful. Is the exam easier or harder than the practice that you posted on Blackboard? It's hard to tell. It will be exam is definitely easier than assignments. Because the assignments you have more time to practice. How many multiple choice questions? 20 multiple choice questions and eight other questions. Thank you too. Enjoy your evening. So the exam is not going to be easier or harder. It's hard for me to tell you because I never take the exams. So I don't know if it's harder or it's easier. And at this level, I cannot be, how can I say, I won't be able to be fair judge on this. Is it easier or harder? I hope it's easy. I wish it's easy. Most likely it will be easy. The only way you can make it harder by not touching anything and just go and taking the exam. But if you practice, if you do your assignments, if you pay attention in class, it will be very straightforward exam. And don't forget, it's just an exam. Give yourself a confidence, get some confidence. You're doing excellent on the assignments the way I see it. So keep doing what you're doing. Thank you, guys. Have a wonderful evening. You don't need good luck. Nina, good luck is for people who don't study. For people who study, you just go and get it.
Thank you. Have a good one.
You too. Thank you, Demi. How are you?
I'm doing good. I started a new internship recently, so I'm very tired, but I'm doing good. I hope you're doing good too. How do you feel
Yes.
about the Knicks winning? Sorry.
Sorry, which one?
How do you feel about the Knicks winning the finals?
I don't know. It's gonna be fun.
You didn't care?
Yeah.
Okay.
Yeah,
Whatever.
yeah. We'll see. We'll see. We'll see. We'll see. Right?
Yeah. And
Uh,
Johanna's in your Tuesday class, right?
sorry?
Is Johanna in your Tuesday class or is
Yes,
that
she
wrong?
is. Yes, she is. She is in
Oh,
Tuesday
okay.
class. Yes.
Maybe I'll
Our,
visit. Maybe I'll
yes,
visit.
please. Yes, please, please. But yes, next Tuesday we're gonna have a class.
Okay.
Yes.
Okay. Have a good
Okay.
day.
Thank you too.
Bye.
Bye. Bye.
Take care. Thank you.
Thank you. Thank you.
Thank you, Evan. Have a
Thank
good
you.
day. I mean, night. Yeah.
Thank you.
Take
Thank you,
care.
Chris. You too.
Thank you, sir. Have a
Thank
good night.
you. You too. Thank you.